Siddharth Khemka is joining us now, Head of Retail Research at MOSL, and Nuresh is also here. Both of you, thanks for your time. Nuresh, your view. In fact, the last 2-3 minutes, there's a sudden crack which have come in. Nuresh, do you think it can get accelerated, or till morning we were almost readying ourselves for 22,500?
We've been seeing this downticks all through this recovery, but we've not seen a sharper continuation follow-up. So again, stock-specific trends still remain positive. The index is still struggling, but if you look at the mid-cap and the small-cap indices, today even the BSE small-cap index hit a new all-time high. Yesterday it was Nifty small-cap, and now the Nifty mid-cap is yet to do that. So overall, time to be more stock-specific. And the heavyweights are not yet coming up. So you have HDFC Bank struggling at 1500. You have Reliance struggling at 2900 odd levels only. So once we see leadership coming in from any of the heavyweights, we could be crossing well towards the 22,600, 22,800 mark also.
In fact, just want to mark what the fall has come in at. While, of course, Tata Consumer has been a rank underperformer from the word go after its numbers. Look at a Bajaj Auto that's lying absolutely flat. Nestle is absolutely flat as we speak right now. Tata Motors, ITC have all cooled off from the top of the day. SBI is now drifting towards the red as we speak right now. Maruti as well is seeing weakness. We just flagged off Reliance too. That's also fallen about 0.5% or so. And of course, technology has won very heavy on the index as it is today. Siddharth, what's your opinion of the market right now?
Yeah, hi Aisha. So if you look at the overall setup, I think the market, we continue to remain positive on the overall outlook on the market. We have seen the result season so far being more or less in line to better than expectation, barring some sectors. For example, you have IT, which has been kind of weak. Consumer was not expected to be very strong, but there was a hope that the commentary would come around the recovery post the monsoon, which the IMD has given a forecast of a above normal monsoon. But if you look at some of the larger sectors, for example, banking, auto, cement, capital goods, these sectors continue to report strong numbers, and on back of that, we believe that market could continue to see the uptick. What is also happening is that in the broader market, select names or select themes are something that the market is picking up. For example, today we are seeing a lot of momentum in metals, and that is largely due to what is happening globally. The dollar index is at a 2-week low, and we know that the metal prices have an inverse correlation with the dollar index. So that gives an uplift to the LME prices. And we are seeing the stimulus and the recovery in China economy, and that is what the hope is that metals could do well. But if you look at the results expected from the metals companies for the Q4, we are expecting a dismal quarter on a high base. Things could look weak. Margins are expected to be lower. Realizations are expected to be lower, and we are expecting a decline in an overall aggregate PAT. So something like what we saw again in MCX. The story was of newer product launches that the market liked, but the results would start coming in from over the next couple of quarters, and hence more of a long-term or back-ended growth rather than the near-term growth.
Siddharth, what are your top picks from the cement space? Look at how ACC has shot up almost 5%. Adani Cements, Ambuja actually is at a lifetime high. Some mid-tier cement names, Orient, etc., are doing well. Which is your favorite side of the market here in cement?
Yeah, so I think, Ajay, if you look at cement, the best player has been Ultratech across cycles, across regions, and across market, which continues to be our preferred pick within the overall cement space. We have a target price of 11,300, which is a good, decent upside from current levels. If you move a little further below, we like Dalmia Bharat. We like JK Cement between in the mid-cap space. Both are in different regions, and again, some of these sectors, regions where they are there, we are seeing the good improvement in demand. Although realizations have not improved thus far, but the major benefit that they're getting is A, strong demand, and B, margins have come up better. So EBITDA per ton is improving on a sequential basis. Plus, the most important factor is that the real estate demand has been pretty strong, and we are seeing company after company reporting the record pre-sales data. So that is something that keeps the cement sector in focus. So large cap, we like Ultratech. In the mid cap, we like Dalmia Bharat and JK Cement.
Look at some of the other buzzers in trade. Look at a Chennai Petro, for instance. That's seeing a solid earnings reaction. The stock has shot up about almost 16%. They've seen a revenue uptick of about 2% on a sequential basis, but the EBITDA has seen a jump up of 53%, and that's on a sequential basis as well. There's been a decent margin expansion that they've seen, a 55 rupees per share dividend, and a 20% decline in the net debt is what they've seen. So quite a blowout quarter by Chennai Petro. To 10.5 million shares traded. It's so, the bump up in the stock is coming in on the back of some decent volumes today. MCX though, that's down about 4.5%. The numbers were okay and the gold rush clearly continues. But Morgan Stanley says that, according to them, the numbers haven't quite matched up to what they were anticipating, and they maintain they're underweight with the target price of 20.85 on MCX as we speak right now. Kunal, two questions for you. A, of course, the charts of Chennai Petro, and B, what's the best way to play gold? Buy gold?
Yeah, buy gold, but I think right now we are into a point, Aisha, where the gold on the dollar-denominated prices are going through a corrective phases. I think that this correction is so far just 7% on the dollar prices. I think from 24.37 approximately, we have hit 22.90. The last I had seen on the gold prices. I would believe that at least another 3 to 5% correction is still pending in terms of the gold-denominated prices, which means on rupee terms, we should be looking at maybe a 68,500, 69,500 kind of a level to be hit on the Indian rupee prices. Maybe that could be a very good point where you may look to buy gold in terms of the rupee terms. But I think on Chennai Petro, on the other hand, I think it's a classical sign that Chennai Petro, MRPL, many of these stocks have gone through a very trending kind of a breakout, because if you look at the last, same time last year, these stocks were closer to 450, 500 odd levels. They've moved in a stronger kind of a trend phase. There was a patch of consolidation where these stocks remained to a very tight range. And remember, these are very high beta stocks, because when they get into a breakout mode, it's like the metal or the real estate sector. When these stocks get into a breakout mode, these breakouts could lead to the stock moving up higher by a margin of 30 to 50% in just a matter of few odd weeks, few odd months. So I believe that we are at the cusp of a very similar kind of a breakout for Chennai Petro, MRPL. So I think traders can look at a buy at current levels also.
All right, gentlemen, stay with us. We'll take a short break, come back, and more specific trading ideas on the other side. All right, let's get you an exclusive story coming in. Samir Dixit is joining us from Delhi. The sources are telling Samir that the food regulator has now expanded the scrutiny over added sugar and salt in infant food across categories in many companies. Samir, tell us, what else do you bring to us?
Yes, definitely. After the Nestle case incident, where we have seen that the Swiss investigative organization, they raised this point that the Nestle baby food item contained added sugar, which are being marketed in Asian, African or Latin American country. Now that raised many questions, and it's the fallout of that particular case that now here in India, the food regulator FSSAI has expanded its quality checks on other brands as well, including Nestle. But we are picking up from our sources that the quality checks have been carried out on the baby food item that is being marketed by other brands, whether it be Patanjali, Dabur, ITC and several other brands which are having baby food items for the children of age 0 to 5 years. And sources have informed that this quality checks, random sampling, it has been started. The regulator is targeting, they are aiming to complete the quality checks within 2 months. And this quality check is to check that what sort of added sugar, the quantity it is there, and not just the added sugar, it is also about the salt content as well. On 3 levels, this quality check will be done. First is that what sort of content it is being added. Second is the labeling, and third one is the packaging. So whatever the content it is being added, it is as per the standards or not. The packaging, whether it is giving the right information or not. So these sort of quality checks is being carried out. The random sampling has been started. The product of these baby food items of various brands, they are being picked up from several markets, and quality checks it is being carried out. And the regulator is looking to complete the checks within 2 months, and then further action will be initiated.
Right, we leave it at that. Thanks so much. That's some clarity coming in by on the allegations made by the FSSAI in terms of the eligibility of some of these FMCG company products for children in specific. But that said, today, of course, you've got Axis Bank, which is due to declare its numbers. If we can quickly, take it across to Gaurav as well and try and understand what we can expect from Axis Bank. He will just come off, next and highlight what to expect from Axis Bank. Of course, we've seen that there has been not much of, excitement post HDFC Bank's performance. Axis, though, is going in better into its numbers, holding up about 1%. 1,064 is where that stock is. Gaurav, what is your poll penciling in for the numbers?
Well, yes, Axis Bank will come up with their Q4 updates, and if we look at the consensus estimates, now they are expecting 1.9% of a growth on a quarter-on-quarter basis in net interest income. They are expecting some kind of moderation because of the decline in CD ratio and higher LCR ratio in this quarter. But apart from that, PPOP is expected to grow by 1.5%, and lastly, PAT is expected to grow almost by 2.4% on a quarter-on-quarter basis. Now, we actually cannot compare the YOY numbers because we saw that there was an expense, one-time expense in 4Q FY24 for Citi's India consumer business acquisition. But apart from that, if we look at the advances and deposits, now consensus is expecting advances to grow almost by 4.3% on a quarter-on-quarter basis, while deposits are expected to grow almost by 5.5%. They're expecting CASA mix to remain stable or maybe increase by a bit in Q4 FY24. And if we talk about the net interest margin, based on all these data, NIMs are expected to decline almost by 10 bips on a quarter-on-quarter basis to 3.9%. Lastly, coming to the asset quality, they do not see any kind of risk in asset quality. In fact, we may see decline in credit cost in this quarter, but the key monitorable would be the fundraising plans, because we saw that during the filings they said that they may also opt for QIP or rather take an approval for QIP. Apart from that, any kind of outlook on growth will be important for the bank, and lastly, any kind of outlook on cost of deposits will be important from the management, because this will decide a pathway for the bank going ahead. So all in all, keeping an eye on Axis Bank on the back of the Q4 results which are coming ahead.
Right. So in general, good set of numbers, but at the same time, look at the last 1 month. A lot of the street is already expecting a good set of numbers. So that is something to watch out for. Siddharth, I want to talk to you about Cipla. There's a tactical upgrade by another brokerage firm, but the view is that 25-26 could actually see upgrade as far as the earning estimates is concerned. Have you looked at Cipla recently, especially last few quarters, the kind of quality of numbers they've declared?
Yeah, Jay. So I think among the pharma stocks, if you look at the overall aggregate as well on a sequential quarter basis, the earnings growth is kind of improving, and that is giving a lot of focus from the market to look at some of these names. And within the overall healthcare space, you have the traditional pharma companies, and B, you have the hospitals or the healthcare companies. And the healthcare companies have their different story. They are reporting growth. But if you look at the core pharma companies within that, Cipla is something that we have been liking a lot. In Jan, we kind of recommended Cipla as the stock, as one of the stocks for the year 2024. While Cipla is working to enhance its prescription base, it is also working to strengthen its generics and the consumer healthcare business, especially in the India business. So what we are expecting is a steady 12% sales CAGR within the India business. And even in the US generic business, some of the newer launches, the injectables, inhalation, so those products launches are also helping 8 to 9% growth in the US segment. So overall, as I said, Cipla remains our preferred pick in the large cap pharma space, given its growth in India, its robust ANDA pipeline, as well as its de-risk regulatory factor due to the filings from various alternate sites. So a steady earnings growth of 13%, but a preferred pick within the overall pharma space.
Right, okay, that's the take coming in on Cipla, and Cipla, of course, is the strong one today. There's also Chambal Fertilizers holding out very strong. There's UBL, which is holding up now at the session highs, about a 5.25% uptick coming in. And HAL as well is the other one, Hindustan Aeronautics, that's also inching towards that 5% gain mark. Naresh, come in on some of these buzzing names, a UBL, Chambal or a HAL?
So Chambal is what looks interesting. The stock has finally broken out after a long period of consolidation. The stock has gone. The stock was last at 400 rupees back in 2021. In the last 3 months, it made a consolidation between 335 to 385, 390. So finally, a 52-week high, a good breakout. This could slowly and steadily head up towards 450 in the short term, and then 480. United Brewery saw a spike today, but finally the stock has broken out above the 1900 mark. Over the last few months, it has had a few false starts. So 1750, 1800 is where it topped out in 2021, then in 2022 end. And even in 2024 start, we topped out. So finally, it is sustaining above the 1900 mark. Could be a start of an uptrend, which could slowly and steadily take it towards 2200 odd levels.
The results of 361 today triggered a big move. The stock at one point in time was higher by almost 13%. But what is happening is that Nuvama Wealth also has shot up. You saw NAM India shot up. A lot of asset managers are doing well. On the charts, which one looks strongest to you?
So 361 is Nuvama is amongst the strongest one. I think even Edelweiss as a stock is also done reasonably well. I was looking at NAM India as a chart, and I remember I think the stock was almost at 275, 250 just about 3-4 quarters back. That stock has done exceptionally well. Third or fourth consecutive quarter where the stock has moved up to 500 plus mark where it's trading right now. So I think that's also another stock which has done reasonably well. Now, maybe as a fresh buy, I would probably look out for Nuvama as well as Nippon Life, NAM India. These are the two names which I would believe could hold merit even from current levels. They have this odd habit of going into a price-wise consolidation, not a major price correction, is what we've seen for these stocks. So I think maybe a consolidative zone of couple of weeks and a price correction of maybe 3-5% could be taken as a good buying opportunity.
Yeah, in fact, for 361, the revenue from operations has seen an uptick of 46% on a year-on-year basis. The PAT saw 56% surge coming in. The ARRs, that's annual recurring revenue, that also has seen quite a bit of uptick. Also, the first interim dividend for the financial year as well was declared by them, about 3.5 rupees per share as well. So 361, of course, holding out very, very smartly in trade as we speak right now. But what's clearly not looking good is the entire IT pack. I mean, you saw the numbers from Tata Elxsi, Wipro, Infosys, TCS. Clearly, the street doesn't seem much enthused by that. LTI Mindtree is going to be declaring its numbers. And tomorrow, of course, you have Tech Mahindra as well. And I think Mastech also maybe. Zensar Tech, I beg your pardon. That's also going to be declaring its numbers. So that clearly, the market has written off IT and it's not in a hurry to even buy any sort of dip or latch on to any glimmer of hope also that the management indicates. Case in point being TCS.
Yeah, Aisha, I think the street before the result season started was a little bit hopeful of a recovery in the second half of FY25. If you remember, Accenture had earlier downgraded its guidance. The street surged off that, thinking that Indian companies might give some ray of hopes, but we have seen the revenue growth guidance cut by Infosys. That was not gone well by the street, and the management commentaries of the IT companies that have come out so far. It's only leading to a downgrade in earnings estimate for FY25. And we had seen some hope recovery in the IT companies in terms of valuations between the two quarters, where, as I said, we started expecting some recovery and that hope is now dashed. So on a long-term frame, the order book continues to remain strong. The business model is good. But in the near term, next 1 or 2 more quarters of pain is there to be endured by long-term investors. So someone who is looking from 3 months, 6 months perspective, I think IT could continue to remain under pressure.
While auto stocks have done well, one of the auto stock has gone into a sideways consolidation for a long time, and that's Escorts Kubota. They've recently taken price hikes as well, higher by 1% today. Have you looked at the valuations of this one?
Yeah, I think if you look at the overall tractor space within the auto space, I think last quarter itself, Mahindra and Mahindra had kind of lowered the overall industry growth numbers for the tractors, and that was something which kind of continues to remain within the three packs, that is the passenger vehicles, the two-wheelers and the tractors, continues to remain the most under pressure. And this year, the good monsoon hopefully should help some recovery. But as I said, a low single digit for 6 to 7% growth in tractor industry volumes doesn't pair well for a tractor only business like Escorts. If you look at M&M, there are other businesses, the SUVs, the passenger vehicles, that is something that is kind of doing well and that is helping them kind of counter-cyclical in terms of the tractor business. So we are not that positive on the overall Escort space. I think we currently have a neutral rating. Within that space, we like M&M, that is our preferred pick. But among the entire auto pack, the most preferred pick right now is the two-wheeler space, in which Hero Moto clearly stands out in terms of valuation, in terms of growth, and also to play the rural recovery expected post-monsoon.
So we let it go on that note.
If you like this video, then like, share and subscribe to ET Now.